Hello and welcome viewers. Let's understand the commodity market strategy for the day. We have Kunal Shah, Head Commodities Research at Nirmal Bank joining us. Kunal, crude oil prices down almost 11 to 12% in the last 5 trading sessions. Where are we headed?
I think it seems that the correction what we've seen is overdue and we are due for the bounce back. It may not be the sustainable one until we have a clarity on the global economic data which is coming on. But the fact remains is that we've seen too much correction and I'm expecting for the today's evening session some bit of pullback. So 34.40, 34.45, good levels to go long for crude oil. You can expect oil prices to again move up and test levels of 35.20 during the evening session. So still not fundamentally bullish, but we are expecting a technical bounce back today evening.
Right. And what's the sense that you're picking up on the back of the US crude inventories data that is out? What EIA is still saying is that it's still below the 5-year seasonal average. What does this actually mean?
Well, generally, whenever you look at the oil data and you see what is the 5-year average, and below that, if the inventory is there, that is generally a bullish indicator. But the matter of fact is that right now the other factors are playing a major role rather than the crude oil demand and supply. The other factor includes the kind of crisis which is going on across the world that is going to lead into destruction of oil demand by more than 1 million barrels. So that is basically causing a glut in the oil market, and hence oil prices are going down. So US inventory was slightly supportive for the prices, but there was no support and crude oil prices continued to tumble.
Right. And moving away from crude, we've already spoken about the coronavirus impact on crude prices. In turn, if you see gold as well. Now, for an asset class that has already appreciated by almost around say 25% in a year, there is an expectation that there is further support expected on the back of the spread of coronavirus. Taking this into consideration from a longer term perspective, how much more of an upside can we still see in gold? And do you think as an investment product, it's still good to invest in gold as an asset class at this day and age?
Structurally, gold is still looking bullish. There's no second doubt about it. But the way it is moved up in last 15-20 days, it seems that every time we see some rally now, you see some profit taking coming in the market. So I believe that still gold is looking strong only. 42,300 good levels to again go along. 42,700, 750 book profits. That is the strategy we recommend for the evening session. But the fact is that even though profit taking keeps coming, the way US bond yields have been collapsing, the way the global equity markets have been going down, even if gold goes down, I will not recommend to go short. In fact, going long is the better strategy even for the trading in the current economic environment.
Right. And do you expect gold to remain range bound if you have to take a 6 to 8 months perspective?
Not range bound. Gold is going to be very volatile, and if the bad news keeps coming in, then the likelihood of it making another new high is very high rather than just staying in a small range.
Right. All right, Kunal. So that's the strategy we need to follow in terms of crude as well as gold, and that's the outlook from a medium term perspective as well. Thanks for watching.